Good morning. It's Tuesday, July 1st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So, as many of you know, I have been traveling and I'm now back at the Blue Line South office. I've been listening to an audiobook entitled The Art of Winning by Bill Belichick, who narrates it himself, and it's fantastic. He discusses a lot about process and outcomes, which is very relevant to trading. While we can't control the outcomes, we can't control gold going to 4,000 or silver going to 50. We can certainly control our trading process to try and potentially maximize returns if we get to those levels. By focusing on the process, we can maximize our chances of achieving positive outcomes. So really, you want to take a moment and reflect on your trading process, especially as you go into an extended holiday weekend, and ask yourself, are you putting in the repetitions? That's why for myself personally, I produce the Metals Minute. I'm really doing this for myself. And then I outline the intraday trading levels in the Metals Edge. Then I follow that up with long-term trends in the Precious Metals Chart Pack. Additionally, I send out, and you guys don't see this, a what I'm watching email to the team where I feature specific trading ideas and key points to reflect on and to watch during the day. So if you're interested in seeing any of these resources, please reach out to info@bluelinefutures.com or register in the link below in the description. Now, looking at the US equity markets, they are taking a little bit of a breather here. Are they running out of steam? We've been up for 6 straight days. So the S&P 500 is slightly lower after following 2 consecutive record closes for the cash index. Investors have really gravitated towards some of the riskier sectors of the market here to maintain that momentum upwards. During the second quarter, we saw asset classes like Bitcoin, we saw non-profitable tech, high beta stocks, and really popular retail names taking off and leading those returns. So we highlighted, if you work closely with myself, we highlighted the Russell as a potential buying opportunity back in early May, and congratulations to those that acted on the recommendations. Currently, we're facing that upward resistance. I'll put that in the chart pack. You could also see the inverse head and shoulders pattern that we identified as well. You really had 2 opportunities to exit that as we hit and completed the pattern to the upside here. So checking in on the data, we do have the S&P 500 down 14, down about 20 basis points here at the moment. No real alarm bells going off here whatsoever. It is a holiday shortened week here. We'll have a more muted session on Thursday, and a lot of traders take off these complete weeks altogether. So we're going to want to watch the volume as well, as we anticipate it would die out quickly once we get past some of this key economic data. We do have the NASDAQ down about 28 basis points at 64 points, trading at 22,828. The Russell's down about 7.8 points at 2183. FANGs are slightly lower here, and the volatility index just creeping up here just a touch. Now, overnight, Trump did threaten to ramp up those tariffs on Japan, while there were more promising signals for the European Union, which is reportedly willing to accept a trade agreement with the US that includes 10% universal tariffs on many of the European Union's exports. So the dollar index was another big highlight here. It's down about 40 basis points today. And you start looking at that chart, it's really going off a cliff here. So it's had its worst first half of a year since 1973, down about 11%. So what we saw here is that the cash is trash theme started to come into play, and that's where traders were really starting to park their assets in other asset classes. That's where Bitcoin really benefited. That's where things like gold, silver. Gold had a little bit of a rug pull here, given the fact that you had decreasing geopolitical risk, the Fed holding things higher for longer, a risk-on sentiment in the U.S. equity market. So you had that rotation go back into other asset classes, come out of the gold market. Really, it was the geopolitical. I mean, we wouldn't really have thought that under typical situations that you have such an aggressive stance on Iran and you have the promises of shutting down the streets of Hormuz, and then you don't see that follow through on the crude oil and the gold market. Well, we were able to realize from this and really going forward, because I've been a commodities broker and a futures trader specializing in the macro markets, really specializing in gold, silver, and crude oil were my forte, especially when I ran one of the largest trading desks at MF Global, Lynn Waldock, back about 15, 20 years ago. And we really watched Iran and the possibility of them shutting down the Straits of Hormuz, now that premium has really come out because they can't kill the golden goose and they can't upset the region whatsoever. So the likelihood of a shutdown, even going forward under any circumstance, seems unlikely and most likely will be a buy the rumor, sell the fact type of play. So put that in your trading notebook here and in the back of your mind. Now looking at earnings don't kick off till July 15th. You're going to have 73% of the S&P 500 report between July 11th and August 1st. We will have a couple key dates where some things happen, like the next kind of tourist headlines here where it's going to be all over CNBC. People are going to be chattering about it. It's going to be the July 8th reciprocal tariff deadline. July 15th, you'll have the inflation report. That's actually expected to tick up just a bit of a notch. And that's also where you have the earnings start to play. Now looking at some strategy papers, and this is what I usually do over the weekend. A lot of times at night, I'll go on, I get access to all the different research, the drop boxes here, the things like that. And I was reading something from JP Morgan, and what they were saying here is that they were looking at different scenarios that are most likely to, where the S&P 500 is most likely to rise in the back of the non-farm payroll data due out on Thursday. So they look at a couple of key different probabilities here, and really the highest probability is a 40% chance that we see that number come in between 105 and 125. They expect the S&P 500 to rise about 0.5 to 1%. If we come in below 285 to 105, we should be slightly lower on the S&P 500. That's about a 25 basis point. And then if we come in higher here, 125 to 145, we should see another jump up here pretty aggressively on the S&P 500. So you really want to watch if the number comes in at 105 or lower, that's where the market could quickly get defensive here. So traders might be long on futures contracts with put options. They see the number come out, they clip off the futures, they hold the puts for the day and see how the dust settles. So not a specific recommendation. These are just some ideas and strategies that I'll implement with particular clients. If you'd like to be a client, shoot an email at info@bluelinefutures.com or reach out specifically to the trade desk. So we will have a busy week here where we have manufacturing PMI, ISM manufacturing, construction spending. We also have the JOLTS job openings data. I think a lot of people are going to start watching that. It's areas of the economy here, specifically employment, where we don't want to see any material breakdown here because that could push the Fed's hand a little bit faster. Now, I do think that if you saw that handwritten note that Trump had written to Jerome Powell, where he had all the interest rates that different countries have, and he wrote this note, you know, you're too late, and blah, blah, blah. It's really actually worth looking at. And forget what Trump says on there to Jerome Powell. I understand why he's doing what he's doing, although many and everyone disagrees with it. If you look at the different countries and what countries are holding rates at 4.5% and higher, it's a little bit ridiculous. The only one that's more modernized is also Israel holding that high, but realistically, we need to be a lot lower on interest rates. And that's just my opinion. And also, it seems to be the opinion of Trump as well. But pushing on here, let's get off topic here. We will have Fed Chairman Powell. He will participate with a panel, and it's all the major the Bank of England, the ECB president, Bank of Japan. They're all going to be talking about 8:30 a.m. Central Time. Now, shifting into the metals markets, huge sell-off on Sunday night. Saw some panickers. They were calling in and stuff like that. I didn't get a chance to talk to him here because I was really busy here. We had a wedding that we were attending over the weekend, and we were catching up with family and everything else. But we saw the gold market bounce off a key level support, 3250.5, bounce up aggressively, close this night session here a bit higher. Saw some follow through to the upside a bit yesterday. Now we're extending those gains even higher here today, 3360. Gold's about $130 off the record high here. You look at the silver market, you got this bull flag. Now we're starting to bounce back up to the upside. Again, what takes away a lot of these emotions here is when you start to look at things like the chart pack where you go, okay, the futures are above a certain key level here. If they don't break below down that key level, there's no real reason to have a panic here. Also, as the market starts to break down below and we start to sell off, you can always trim positions off here. And that's where you use the intraday trading with the metals edge and you start to look at those different tactical ranges and things like that. So looking at the silver market, and the way that I have this structured is I have a monitor over here that is a large curve monitor that has all the daily charts. I don't mean to not be facing you, but it has all the daily charts lined up here with all the key levels. And if you look at that silver market, you have the flagpole, you got the flag coming down here. Yes, prices are working their way lower, but we haven't had any breakdown below that level of support, which is $35. That's why I have an upside bias to the upside, and I like adding at the bottom half of that flag pattern and like to let some go as we get closer to the upside of the flag pattern, and then hold some positions on if we break out to the upside. Many of you have options on, call options, that way you don't get the FOMO if we all of a sudden jump up to the $40 and $50 region. My upside target on the silver market, and this is just me personally, $38 to $40 by year end. I think that we could see that type of play develop here towards the end of the year and into the second half, provided we don't have any material weakness in outside things, because there's a lot of things that could take down the silver market. Forget what you think about, coins and supply and mining and stuff like that, and ETF supplies. Really, you get a recession that could take things down. Look what happened with COVID. You get a number of different things that could take place. China's economy could completely slump. Sunday night, the reason why I wasn't fielding many calls is because we had a upside bias on this economic data coming out in China, and we saw that Chinese data beat expectations, and that's what caused the reversal to the upside in the metals markets here, and that came out at 7:30 when the market opens up at 5 p.m. So we wanted to wait for that number to come out before we start having any kind of real concern about what's going on here in some of these markets. So you got copper. If you do get the chart back here, copper is pushing up and reaching a 3-month high due to the ongoing supply squeeze and the improved risk sentiment. So it is testing the upside objective that we put in the chart pack as well. It's really bolstered by that optimism surrounding potential trade deals between the US and other major economies. So spot copper contracts are trading significantly higher than the futures contract. You guys want that short squeeze in the silver market? Well, you really want to see those huge premiums that take place here with the coin dealers and everyone else, and you're not really seeing that at the moment. I think that people are still utilizing these kind of rallies here, and they might continue to do that because some people do need to raise cash. They've held on to these metals for quite a long time. The metals seem to be cumbersome, and people that have held metals where I was buying silver, physical silver, when it was $15 and below, that now you have these easy proxies to re-own the thing, just like what a farmer does when he sells things out, and then he'll sell it to the elevator, he'll re-own it on the board, and he goes along the futures contract. So I'm seeing a lot of people do that, where they replace their 1,000 ounces of silver with the 1,000-ounce futures contract. So we do have gold up for the second day here, climbing on some optimism that the Federal Reserve will resume its rate cuts in this second half. Investors are continuing to monitor the trade talks, again, ahead of that July 9th tariff deadline. Now, getting back here to the other markets here, sorry, I went a little off topic. You go into that gold silver market. The exchange traded funds, they did cut about 50,000 troy ounces of gold holdings previous session here. I think that these were people that they own gold, they trim some off here, they start to buy some of the high flyers in the baskets that were the best performers. These are the money managers, the RIAs, things like that. Then they say that they own this asset when they send out the quarterly statement to their clients here. So a bit of window dressing is what they like to call it. They also added 2 million troy ounces of silver holdings in the previous trading session here, bringing this year's net total purchases to 56 million. So on the ETFs, what I really watch here is the year-to-date percentage change. Is it going up? Is it going down? Is it really getting a big jump? Are we getting any kind of milestone levels here? So gold up 9.3%, silver up 7.9%. Gold-silver ratio, yes, it's less relevant nowadays. I like to watch it just for fun. 91-1 here on that market. You do have platinum, palladium both pushing higher. Agricultural markets, you had that USDA report. Really, if you want to watch anything on the USDA and stuff like that, again, I have partner Oliver Slope, Matt Bresnahan. They write up on the grain markets here every single day. That's their key focus. But the reality is both those reports were slightly disappointing. Where it was bullish on one side, it was more neutral to say on the other side. So you're not really getting any follow through on the grain markets whatsoever. Plus, I think a lot of people are looking to sell any kind of rally you get there. So looking at Bitcoin pulling back 106,000, down about $1,500. So we'll want to watch Bitcoin as Bitcoin is signaling some lower highs on the charts, pulling back a bit here. and could be, and it also has lower lows on the charts going back since peaking out right around 111,000. So that's something to keep, that's slightly suspect. So I might continue to let some of those go on any kind of upward push to the upside and wait for a renewed breakout to the upside before getting more aggressive, taking your position up to your maximum position. So a little bit longer video. I had to do a video Sunday night. Apologize for the quality of it, things like that. And I also did it in front of a room. This is kind of ridiculous. There was, I did it on the rooftop of my my wife's, parents, my in-laws and stuff like that. And there were about 50 people there. And I'm like, you guys got to keep it down for a second so I could do this video. And they were just staring at me like mortified that I was recording a video on like gold and silver and talking gibberish, that they had no idea what I was talking about. But so it was kind of funny there, but also a little nerve-wracking. But you guys got any questions? Give me a call, shoot an email, info@Blue Line Futures. You want to open up a trading account, super easy to do. And then also with the lower trading volumes, things like that, sales team, they're all ready. They can help you out. You can get an account up in 15, 20 minutes. You can have one up and running. You can have it funded later on the day, and you get 1,000 ounce silver on or gold on, whatever you want to do. You want to pick up oil against support. You want to look at Bitcoin if it goes back down, test 100,000. We can do a lot of different things over here in these markets. Or if you want to hedge your U.S. equities, I like the Russell 2000, perhaps running a resistance, playing it to the downside, put a stop over the resistance point, breaks out to the upside, you got a small loss, but hey, you were potentially hedged there for a moment. Again, not a recommendation, just more of my thoughts in my mind that I'm vocalizing. But longer video, but I think I owe it to you guys. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.